In this weekend's newsletter, which is on the website now, just click the newsletter link, we talked about the fact that the markets would very likely pull back to 2,800 on Monday. It's exactly what happened on Monday. We pulled back to exactly 2,800, actually bounced off that just barely by the close of business on Monday. Today, nice rally off that. We're up about 11 points at the close of business today. And Apple's earnings after the bell are likely going to lift the market up again tomorrow. We saw a little bit of money flowing back into the beaten up FANG sector, right? Facebook's, Apple's, Netflix, Google's. Those got a little bit of money flows today. Not big, but most of them, like Apple, Microsoft, bouncing right off to important support. Those are two stocks that we're long in our equity models right now. And those are actually going to perform well tomorrow. But again, we still remain stuck here at this point, still well below this all-time high that we set back in January. We haven't really been able to get above that yet. That remains important overhead resistance. The market is back to being in an overbought condition. As we were talking about today in the post on the website, this rally up from the recent lows burned up a lot of that fuel that had been built in by having an oversold condition. The selling gets rid of buyers and exhaust sellers, and then that gives the opportunity for buyers to come in, lift the markets up. But when you get back to these overbought conditions, buyers have been exhausted, sellers are at the ready to take advantage of a decline. So we're starting to see the market stumble here a little bit on a short-term basis. Again, this important support here along these previous tops, right along 2,800, is going to be critical for the market to hold here over the course of the next couple of weeks. If we break down below that, we're going to be testing 2,740. There's a lot of support at that point as well. Overall, the market looks okay. There's nothing really wrong with the markets at this point other than we've got some very narrow breadth and volume has not been spectacular. But of course, we're in the month of August and heading into the month of September, two of the weakest months of the year performance-wise. So again, I'm not expecting a whole lot out of the market to the upside. There's a lot of resistance overhead. We're moving into 2-week months. But there's also enough support at the bottom, which is likely going to limit any type of downside break to basically around 2,740 to around 2,800. So it looks like right now that we're just going to kind of remain trapped over the course of the next few weeks, particularly as we move into the end of the year in this trading range. One of the bigger concerns is that despite the fact that we had blowout earnings in the first quarter for stocks, blowout earnings in the second quarter for stocks have really not gone anywhere. So there is a good news, bad news scenario of this. The good news is that with stocks not going anywhere but earnings rising, that is reducing valuations in the markets. Not to a great degree, but we are seeing valuations come down a couple of points in terms of the market. The not so good news is if stocks aren't responding to good earnings, what happens when we get to the third quarter, fourth quarter of this year, where quarter over quarter comparisons become much more difficult? As we saw with Amazon's earnings, they reported a blowout quarter, $5 a share. Primarily, all of that came from a sub 3% tax rate. That quarter over quarter comparison is going to go away next quarter. It's going to become much tougher for Amazon to beat numbers, and particularly though they had revenue growth, it missed expectations. That was weaker than expected. We saw personal consumption numbers coming today, a little bit less than expected. Again, consumers are a bit tapped out here and really focusing on a lot of debt to make ends meet. So any type of weaker environment on the consumption side is going to become problematic for companies' earnings in the next couple of quarters. Apple's earnings today were great, beat earnings estimates by a wide margin, primarily due to their tax rate. That's also something that's going to become much more difficult next quarter. So if stocks aren't responding to really strong earnings growth right now, I do worry about what it's going to look like in the latter half of this year, particularly in the fact that we're now 9 years into a rip and bull market. The odds are that we're going to see slower economic growth beginning next year as well. While we have a lot of our what we call our soft sentiment indicators right now showing some improvement in the recent weeks, the actual hard economic data continues to languish and actually not be very good at all. And so we're going to probably see that filter back through to some of the economic numbers. As we talked about last week, that 4.1% jump in GDP is a one-time anomaly because we had a lot of companies stocking up on inventory, particularly of soybeans, in advance of a trade war dispute with China. That's a one-time gimme that's going to go away next quarter. So we're probably going to be looking at sub 2.5% growth in the next couple of quarters, maybe closer to 2 going into the year. that weaker economic growth rate is going to be harder to maintain, particularly with rising interest rates, which is already seeing an impact in the housing market. We've seen a big slowdown in new home sales. We've seen a big slowdown in mortgage refinancing. We've seen a big slowdown in existing home sales. Those higher interest rates. People buy payments, they don't buy houses. People buy payments of everything. They buy payments on cars. We've already seen a peak in auto sales. We're seeing a peak now in home sales. That's going to filter through the rest of the economy. So the more the Fed insists on raising interest rates in this environment, the bigger the impact is going to be economically. So all of that's going to potentially filter through to earnings in the next couple of quarters. So at the moment, while the market seems to be okay, and again, there's nothing wrong to be concerned about right now, we do have a very cautious eye towards the end of this year as to how things may work out. So we want to maintain our risk management strategy in place, of course. And if you don't have one, definitely suggest you get one. The buy and hold thing's not going to work when this market does turn eventually. So to make sure and protect your capital. So if you don't have some type of strategy in place, go by our website. We've got bunches of articles written about how to manage a portfolio, things to do to help manage some of the risk. If you need help further than that, send us questions, comments, schedule an appointment. We're happy to help you. We do that every day. Richard, Danny, John Camarianos, myself, we're all here to help you and help you make better decisions about your money. That's what we do on the Real Investment Hour. Every day. So that's on the website as well, realinvestmentadvice.com. When we come back from the break, Richard Rosso, Danny Ratliff, and John Camarianos talk. What are y'all talking about tonight? Anything important?
Apple's earnings, housing.
Okay, here, I can sub that. Apple's earnings are great. Don't worry about it. All right, what's next?
Healthcare.
Housing, healthcare.
We've got so many topics, plus calls.
There you go.
And, gosh.
All right.
Workshop coming up soon. We want to talk about that too.
Yeah, and by the way, that Social Security workshop y'all just did last weekend, that's a really great event that people need to get to because it's very unique the way y'all approach it, and y'all cover stuff that nobody else really covers in terms of understanding how Social Security actually works. So I certainly encourage you to get by our website, check out the events tab. All those workshops are on our website now, and we move them around the city to find one close to you as well. So it's on the website now, realinvestmentadvice.com. Come right back after the break. I'm your host, Lance Roberts. Don't go away. More coming up on The Voice of Texas.
Follow Lance on Twitter @Lance Roberts or go to realinvestmentadvice.com.